What's up, everyone? Let's get some people in the room first. Okay, 1 second. I need to close some. Let me take this off the table. All right, had to flatten. Okay. All right, everyone. Let me boot up the. Give me 1 second. Let everybody settle in. Let me spam the link a little bit too, so everybody gets to join us. 1 second. Jesus Christ, come on. All right, today's FOMC day, so it's gonna be interesting. So you're gonna have first half of the day, obviously some trading, but the second half is when the big kahuna happens, right? The Federal Reserve funds rate, where United States is expected to keep the rates unchanged. Furthermore, I don't think they're gonna be dovish. So this probably will most likely, again, depending on what Powell says, most likely we will have gold probably rally. That's my kind of feeling for it. Again, we don't go based on feelings. We trade based on what the fuck is happening. Okay, so give me 1 second. Just logging into the chat. Come on, and so we have to see what happens. Obviously. All right. There we go. Boom. All right. All right, all right, all right. Give me 1 sec, guys. All this bullshit streaming nonsense takes a little while. Give me a sec. All right. Streaming. YouTube Studios. All right. Almost done. Funding. Traders. There we go. And we're live. Yes, baby. All right. All right. Good morning, guys. I see people are still joining, so let's give it a few seconds. Let me see what's happening with the silver. I took a stinker on the gold today, and then I made it up with silver. Break even for the day, basically. Let's see, silver contract. I'll just buy more. And stop loss. There we go. All right. Let's see what's happening with the book map. Oh, shit. That was a little premature. I saw while I was logging in, the price was still pumping in silver. So let's see. Right now we're, as you can see, nothing is happening. It says expired. 1 second, guys. All right, guys. Yeah, so we're gonna have a new code soon. I'll let you know what it is. Yeah. Hey, everyone. Just reading what you're saying so far. Let me pop this up. Chat. Pop chat out. There we go. This way I can see what you guys are talking about while I'm on the air as well. All right. There we go. Yeah, we're gonna fix the expiration for the I don't know why, probably, but anyway, don't worry about it. Try it in a couple hours. Not a couple hours. Try it in 30 minutes. Um, we're gonna re-enable it for the last day. So guys, if you want the 40% off, um, today is the day. The code is in the banner. Lunch 40. Go to Funding Futures. It's a good deal. Obviously we've launched a few weeks ago. We're a new kid on the block, so we want to over deliver on every expectation. So for 40% off, it's a no-brainer, obviously, for you to sign up and trade futures, because you can trade forex, you can trade futures, but futures do have few advantages for United States traders, especially. All right, so since United States traders, the MT4, MT5 platforms do not like when you trade CFDs because it's illegal. It creates problems. So, but even though we still offer MT5, but it's if you're serious about trading and you live in the United States, you're better off learning how to trade futures. Okay, it actually has advantages because you can see all futures are traded on the central exchange. So if you're not primarily trading some exotic forex pairs or minor, even if you're just trading euro, dollar, pound, Aussie, blah blah blah, yen, then you can trade it on futures as well just as easily. And okay, the expiration date is January 31st. So 2 more days for 40% off, guys, and then you're on your own. All right. So I should be positive for the day. Let me just remove this a little bit. Yeah. So I'm going to close it because I can't babysit it. But I'm still keeping my... One second. Let me close it on my account, too. One too many trades. Shit. Should I buy gold? No, gold is chasing. I don't want to chase. Okay. All right. So right now, so today is a big day. Obviously, we have FOMC, which is at 2 o'clock, I think, and then we have the press conference that happens at 2:30. So, second. Let me just see. That's happening at 2:30. You should be watching that press conference because based on what Powell will say, whether or not they're thinking of about the inflation and their expectations, it will give us forward guidance. And forward guidance meaning we will, whether or not they will be cutting more rates, they're going to keep it neutral, maybe they're going to raise rates, right? So all of that is dependent on what he says, and depending on what he says, markets will price in the future accordingly, okay? And all assets basically get priced from federal funds rate, all the debt instruments, etc. So like currencies and bonds and everything, your mortgage. So that's why it's important to see what he says, and the markets will reflect what he. I think the markets will reposition themselves based on what he says. Maybe nothing will be said. By the way, we're falling into negative territory for silver. Not for let me just go on the silver chart. Not negatively, but we're still flat, but dipping. So let's see. Trying to see So this is interesting. Want to see if the so basically, all right, Dixie, somebody want. Dark. I don't know why it's dark. I guess it's because I probably put my head down. I don't know what's going on with the camera. It is what it is. All right. Let's take a look at the Dixie dollar index. So there's few dollar indexes. There's one by FXCM, which is a little better because it's a little more balanced. More balanced because it includes better proportions for the way they construct the basket. So dollar index is basically very heavily skewed towards euro dollar. Okay, so which is trades pretty much the opposite of the euro dollar. That's why. But anyway, we can take a look at both. Right now, dollar is trying to bounce, but given that I think Powell will be dovish, well, the rates will be unchanged, and not only that, he's being pressured by the Trump administration that wants to cut the rates. Why? Well, because they want to stimulate the economy even more. They want to they want to look good. Yeah, they want to push the equity markets and have economic growth, right? So. But Powell doesn't want to do it because he understands that if he cuts rates right now, the inflation is going to pretty much come back, roaring back in, okay? And that will start destroying lower class, middle class people. It will, and so there's kind of a disparity of views, not disparity of views, but the opposing views of what to do. So we'll see, again, since this is going to be the first FOMC presser with the new president. I don't know what was discussed behind closed doors, what kind of pressures were put on Powell or not put on Powell. This everything will be basically. That's why everybody's going to be glued to the monitors from 2 p.m. New York time till pretty much the closing, because it will set the tone for the next 2 weeks, month, easy. And we'll see what happens with all the asset classes. Obviously, if Powell is dovish and he is going to make it stand and say we're not cutting rates, we're not thinking about cutting rates, and they're going to basically say that we are okay at the current levels, et cetera, then I think dollar will tank, the gold, silver go up. Equity markets should go up. If he says the opposite, then again, if he bought into the pressure put on the Trump, and why would he be put on? Because Trump can remove him. Okay, essentially, one in the next, he can replace him with somebody of who he thinks will play his game. Okay, so Powell is. On one hand, he has the mandate of keeping the inflation at bay. On the other hand, he understands if he doesn't concede a few things to Trump, he will get shit canned. Okay, and again, being I don't know whether or not he wants that outcome. Obviously, he's not going to be unemployed for too long. He's always going to be. He's set for life, but still. Anyway, so we'll find out. That's why there's no point in guessing. So we build out scenarios. The way you trade, you kind of you have your expectations. You build out scenarios. If FOMC is dovish, meaning they're going to be cutting rates, or they cut rates, or they're giving forward guidance saying that we will be accommodative to Trump's administration. We're going to keep cutting rates. It's one outcome. If they're gonna keep, if they're gonna start thinking about even discussing raising rates, that's gonna be a completely different outcome. Okay, if they're gonna be saying we're thinking that the inflation might be problematic in the future, blah 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 blah, then they might just then the markets will tank, because if they're gonna start raising rates, the dollar will just fly through the roof. Equities will tank. Gold will temporarily tank as well. So And since we don't know which scenario it will be played out, there is no point in holding um, big trades into FOMC. So right now in the morning we can trade. You can trade for a few hours till 11, till maybe noon, and then I would suggest you fuck off until the presser. Okay, there's no if you get stuck, maybe trade till 1:45, till 2, till the presser starts. But ideally, you want to be out by then. You don't want to have the headache because again, it's a coin flip. Then he might say something which you don't know, which you have zero control over, and your position will turn into dog shit immediately. And why put yourself in that stressful situation when you can just avoid it altogether? Okay. 1 second. Shit, Oh shit! All right, I got taking. I'm to profit on the silver. Okay. All right. So that's basically what's today. 2 o'clock. It's gonna be official again, guys. If you are trading, the first thing every fucking week you have to do is your homework on a Sunday. You have to go to the calendar and see what the hell is happening because you don't want to be in a position and trading into the news. Some news like federal funds rate, FOMC, is extremely volatile, and you're gonna be sitting there without knowing. All of a sudden, at 2 o'clock to 30, boom, your trade either explodes or all of a sudden there was nothing happening, and then a spike one way or another, and you don't know which way it's gonna spike. Okay. Furthermore, once the liquidity, because professional traders take their positions out of the market, the book thins. Meaning this is a book of the order book, and so the liquidity is thin. So since there's a lot less participating professional traders, the price just starts doing wild shit, and market makers can manipulate, knowing where your stop loss, not your stop loss, nobody cares about your stop losses, but stop losses are positioned in general by the other professional traders who didn't take their positions off. They can force the market, they can push the market one way or another to run, liquidity grab, run the stop losses, whatever you want to call it. Okay, and that's why if you don't know what if you don't know that today is at 2 o'clock, this big thing is happening, you're doing yourself a big disservice, and that's highly unprofessional for a trader. Okay, again, for those who are new, that's why I'm explaining to you. Don't take it personally, but that's the way it is. Okay, so Wednesday is 2 p.m. New York time. Everything is New York time here. 2 p.m. New York time, we're gonna have the statement, and whether or not they're gonna cut the rates, keep it the same, or raise them. But the forecast says, this is previous, we're at 4.5% right now, and market consensus is that we're gonna be keeping rates unchanged because nothing economically has changed that much. But again, because it's new presidency. Because new presidency just started, we don't know what Powell will say. This is different. Again, first one for the year, first one with a new president. So it's going to be extremely important for you to wait and see what he says. So dollar index is going to be highly dependent on the rates. What I mean by that? Well, because if they're gonna start cutting rates, or they're gonna say that they're gonna be accommodative to Trump and they're gonna cut rates, then the United States dollars versus other currencies will yield less. Thus, the price of since the currencies are highly rate sensitive, they most likely depending on again, if Powell is dovish, the dollar will tank versus all the currencies pretty much. On the other hand, if Powell says that we are running at the neutral rate, and they are not foreseeing any cuts and blah 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 any near future, then we will have dollar rally, gold down, stuff like that. So for now, I would stay away from. I don't see anything interesting happening in the in the currencies. I think, well, as you can see, the S&P is flat. Nasdaq is tiny bit positive. By the way, let's discuss what happened. Again, this was the Sunday, Monday open, and Monday price action. We're coming back to close the gap. Remember, 2 days ago, I was explaining to you that these things act like a magnet, and that's why I was going long. Also, yesterday, when I was on the air, we were right here. This was the price action on this candle right here. We were on a short time frame, and let me go to actually, I was on the futures feed. There we go. So this was the price action yesterday. This was we thought this possibly could be double top. You could see, you saw the reversal here happening, blah blah blah, and then we took out this swing low right here, and I said wait for the hourly close. Wait for the hourly close. That's why I don't usually go below 1 hour. 1 hour is sufficiently low enough for me to take day trades. Me personally, some people like to dig around on 5-minute chart. They know how to do it. Mazel tov, power to you. I like confirmations. I explain why I like confirmations, because market makers like to push the prices around. As I was explaining yesterday, people who thought that we're taking out this high, bulls are running. This was a bullish candle at some point. People got suckered in, right, for the long. And then what happened? Well, their stop losses were here. So so the market makers pushed the price down, stopped these people out. Then people who were impatient, they went short, thinking, okay, markets are continuing the trend down. Okay, this was a little bit of a pullback, and now we're rolling over. And lo and behold, you have this candle, reversal candle, right? Because they didn't. At some point, this candle was super bearish looking. It was a huge candle down. And this is why you have to wait for confirmation. After you saw that this candle is this candle, it's a hammer with a breakout, okay? It doesn't take a genius to take a one-to-one long here at all. So take out this high, stops here, blah, 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 one-to-one, done. Was trading momentum yesterday to the top side. So I caught some of this move right here. So what's going to happen today? Well, today, I don't know what's going to happen today. I think that highly likely we will close the gap, because that's what gaps do. They act like magnets. So this is highly likely we're going to close it. Am I going to buy now? Probably not. What I do see is that's nice momentum type. Again, look here. This is why you wait for the candle close again. Oh wow, silver see momentum has shifted to the downside. Silver, let's see. Oh, not really. Jesus, it's still pumping. So this is why gold, again, market makers. This was a head and shoulders retest, continuation, right? So this is definitely an area of interest that a lot of traders. Plus stop losses here. So when this price was approaching to the top side, a lot of people want to play the range. So they're going to sell somewhere in this area right here with their stop losses above the swing high. And this is what happened. See, the market makers that pushed the price up today, they pushed it up, grabbed the liquidity above. They basically popped the oil. Well, let me just, I don't know if you can see it. Let me populate. See this? The bulls basically they took the stop losses from people who were short, and then after they just they're taking now profits, and this is why you're getting this candle. That's why it's important to, if you're going to be trading some kind of breakout, wait for confirmation, wait for a candle to close. Yeah, you're not going to be at the best price, but you will save yourself a lot of trouble by not being in shitty trades. Okay, and this is a perfect example as to why you should wait for candles to close. Okay, we have market open in 2 minutes. Let's see what happens. If I'm actually, I wouldn't mind buying NASDAQ futures or cash, doesn't matter. CFD rather. See, I have an order for my group right here. Basically, I wanted the safe trade would be this. This was the breakout area, right? So we broke out, we retest, and then I want to see a little bit of a turnaround happening, at least on the 50-minute time frame around this area, and then you can go long. You can either put your stop here, or if you want, you can put your stop below the swing high for another leg up. Given that it's a news day, it gets a little tricky because, again, it's all news dependent. So, but if I'm already going to be a buyer, I want to have a little bit. I want to catch a pullback. I don't want to be. I'm not going to be buying now. Okay. All right. We just had a cash market open. Let's see. This is NASDAQ actually. It's delayed. Oh, Jesus fucking. Cash market. Okay. S&P. Anyway, so NASDAQ. So if I'm gonna be a buyer of this of stocks right now, I'm not gonna be chasing it up here because you have obviously it can still close the gap, but this rally is getting a little long in the tooth, so to speak, right? So ideally, what I want to see is market makers taking out the stops, coming into the support stops from this previous small swing low, pop the stops, wick into this wick into this area, form one of these bullish pin candles, and then starting to follow through. And then you can just put your stop here, entry above the candle, and write it up. Okay, that's one of the ways. Or if you want to be even safer, you can watch the price get to the level. Because why do you don't want to leave just an order here? Well, because the price can just go like this. You don't know. So it's better to wait for the price to get it there. So you set an alert. Then once the price gets there, you go on the 10, 5, 15 minute, 1 hour time frame, whatever you're trading. And you want to see at least on the 15 minute or 5 minute that there is at least an attempt turning around. Plus, you can confirm it with, because if you're trading futures, you can see that there is a turnaround happening using the footprint charts, volume footprint charts, okay? So you can see who's dominating, whether obviously right now it doesn't matter because we are not at the area of interest for me. But when we get to that level, you can see whether buyers are stepping in, how the price is developing, and act accordingly, because that adds an extra layer of confirmation for you. All right, what is this? Why is this thing here? All right, let's see. Let the market, again, you have to be calm and don't just because there was a cash market open right now. Yeah, it's coming into support, so obviously, but that's what I said. I would want to see them pop the stops, meaning they grab the liquidity, come into my area of interest, and then I like to trade super conservatively, and I like to. Have extra layers of confirmation. So I will take a lot less trades than somebody who will. Because I've taken tens of thousands of trades, I know what works for me. Okay, with my personality, with my psyche, with my emotional responses, I like to trade this way. Somebody who wants to be more aggressive, they can step in. You know, they see that this is a previous swing low. They want to step in. Their stop loss will be just below here, and they get stopped out very often. But then once, you know, so they can be right only 30% of the time. But on the 31st, you know, the other, when they're right, they catch all this because then they go all the way up. So their risk is this much, you know, their risk, basically their entry is here, and they risk something like this. But then you have 1, 2, 3, 4, 5, you know, 1 to 5, 1 to 4 risk to reward. So they don't need to be right every time. But that's not for me. Again, everybody, you know, everybody has different styles of trading, different ways of trading. 1 second. Yeah, 1 sec. Wanna send a link. Somebody's asking about the link. 1 second, guys. Yeah, so see, they know that the stop losses are here. It is a demand zone, but before, you know, there you go. They know what's up. Let's actually take a look at NQ since we're on it. Let it populate. Boom. Okay. Okay, let's see. So what is this area? 530-ish. See, they're trying to bounce. So buyers did step in. Oops, wrong one. There we go. Let's see. But it's still dominated by the sellers. So I wouldn't, as you can see right here, the volume is still very negative. Again, for somebody who likes to be super aggressive, and they're trading on a 1 minute chart, you know, this might have been a good trade, you know. So as we approached here, you can see that their stop loss was minuscule and they already made money. Okay, and this was enough for them. They just trade this quick bounce and then they leave. They trade, you know, 10 contracts, 20 contracts, and they fuck off essentially. All right, but that's not my cup of tea. All right, I like confirmation. I like 1 hour time frame and above, and that's simply because that's what has been working for me. I've tried it all. Trust me, I tried it. And just over the years, I've developed what works for me, and if it's making money, what, you know, I don't need action. I don't need to press the button to gamble and feel like I'm in a. As you can see by my voice right now, I'm not super excited. I'm not yelling here and doing a monkey dance for YouTube. It's because I'm trading first. I'm not a YouTuber or any of that nonsense. I'm a trader first. That's why I'm leveled right now. I'm not excited. I'm not down, but I'm just flat. Okay, and that's how you should be approaching the markets. You shouldn't be hopped up on fucking coffee, cocaine, and whatever the fuck, and let's trade. And that's when you start, spinning the wheel at the casino, essentially, right? You don't want to do that. So let's see, 5-minute chart. 5-minute chart. See, the buyers did step into the demand zone. They took their profit, and now they're fucking off. And the volume is still negative, as you can see. And there's somebody, we're just chewing through the order books, and boom, new low, boom, lower, and you can see it right here. All right, so that's why it pays to have it pays to trade futures sometimes, because you can see internals, but you don't have to. If you're trading CFDs and forex, it's enough. The candles will tell you the story. It's just nice to see confirmation with the internals behind it, So, oops. Let's take a look at the internals of all these candles. So you can see that it's just red candles with sellers dominating by a huge margin. So why am I gonna rush myself into buying anything until I'm gonna see, okay, the buyers are actually here, and there's just zero indication of that for now. All right. So even in a 5-minute chart, you can see that this was negative, and this is still negative, even though it's trying to be a positive candle. It's still a negative delta. So there is a battle going on, obviously, and but as my internals is showing right here, we're still not in the positive territory for me to buy this support. And again, I'm not trading the intraday 5-minute chart on Nasdaq right now. So I think silver and gold might be a much better play because today, this is why I went long silver today, and well, I closed my positions prior, well, live on the air, but I had to close my positions for two reasons. So first of all, as you can see here, we're approaching this trend line. I don't know if you can see it. Let me just pop it here. Shit. Fuck. What is this thing? So this is silver. First of all, you can see you always have to watch the correlated markets. Gold is up 30 point whatever, 25, 30.3. Silver is up for $2, and it's a poor man's silver. I like to see. I think that silver is leading the way here, and gold will soon follow through. But I had to take profit on silver. Why? Well, simple, because on a 4-hour time frame, you have to mark your levels of support and resistance. Okay, so this was making higher, lower lows and lower highs, and we just reached pretty much previous level, but still lower. So we're still in the 4-hour downtrend. Lower lows, lower highs means downtrend, correct? So this is a corrective price action of this leg up, and we're chopping about. So since we are at resistance, I close my position at the resistance. That's all it is. Plus the daily limit on silver is here. Plus the news. So I already made my money in the morning. I wouldn't be selling here for sure, not yet. Again, you want to see some kind of turnaround, but this is why I closed here, because of this. Well, you can see it was marked on my charts here that it's at the resistance. So again, this is one of the accounts, just trading small, trading small, trading small, trading small, adding each day. You just build up to get to level. Don't try to swing for the fences when you don't know what you're doing. All right, a couple of $100 a day will get you to the funded stage, and you can then slowly scale it up. And it might take you 2-3 weeks to get to the funded stage, or a month or two. But it's better to do it that way instead of trying to swing for the fences and then blowing up accounts. Swing for the fences, blowing up accounts. Wait, let's go to Nasdaq. See, so that demand zone obviously didn't hold. Okay, so yeah, the scalpers made their money. The first touch, second touch, but as you can see, it's nice to have the cumulative volume delta, meaning to see who's winning, who's sellers or buyers, and you can see that the sellers are dominating. Obviously, you can also see via the price action, but that's why it, unless you're like a short-term scalper, this you want to see on an hourly basis something to change first. So we pop these stops. So this is sufficient. It can turn around here because they basically wanted to run the stops to grab the liquidity, and now they can take profit. Was it sufficient enough? Maybe not. So this is a much better area for me personally to look for buys. Why? Well, this is the proverbial order block, and this is a decent area of support now, which was previously resistance, right? So This is in this area right here. I would be interested because there was a lot of activity going on here, and then the breakout. So you essentially have a breakout from this area of consolidation, and now we're gonna, as I've given you numerous examples of breakouts and retests and continuations, right? So the there's a reason for that price action the way it happens, because the market makers, they have longs and shorts, and they need to square them off, and then they once they square it off, they can take the price back up. All right. So anyway, this is the area for me for Nasdaq. I'm not doing anything until then. So somebody can, unless there's something obvious that happens, but you can see we took the stops, and usually if this trend up continues, it can easily turn around here. But a more conservative trade would be around a much heavier level. So because there's going to be a lot more buyers here, and you can see the picture is still not pretty for the buyers, because the sellers are just kicking the shit out of anybody who's stepping in, and people who are stepping in and not just scalping on a 1 minute chart. They're stepping in, they're getting railroaded right now. It's a freight train just chewing through them, new lows again. So that's why you don't step and you don't catch falling knives when there is no evidence to do so. So let's see where you can see that we have dynamic areas of support resistances. Not dynamic, I mean order. We have orders. So let's see. Oh wow. Okay. This is really trying to bounce now. I'll remove these stupid dots. I don't need them. I'm looking for divergence here. If there's no divergence. I mean, it's equal, but so is here. That would be a more interesting play for me. Also, there was a divergence. Looky here, on the order book. You see this low right here? It's higher. It's sorry, this low right here, and this low right here. You see that, right? That's so this one is lower, but on the chart right here, the volume was not as heavy, so this is why it turned around. You can see that there's a divergence, and this was a short term. Again, if you're scalping, this is not for 1 hour type of time frame trading. This is for literally 5 minute scalping. These tools, intraday trading. So this is why it's nice to see this divergence pan out, and you see the divergences between prices, and you had a little bump in 20-30 point jump. Again, you run MQ. You run 5 contracts, 10 contracts with a tight stop loss. It can work. By the way, look at what's happening here now. This is a 1 minute chart. This is the previous area of support swing, right? Looky here with the breakouts and continuation. What happened here? We had a bounce around this area of support, right? Bounce. But then what happens? We broke out, and what's happening now? We retested it, and now we're going back down. All right. So again, retests are. This is the way I like to trade. I like to see retests, continuations. So if you really want to short, you can short here. Put your stop above these above these highs, and again, this is 1 minute chart. It's like the probability on 1 minute charts is much lower than on 1 hour. On 1 hour time frames, it's solid. That's why I prefer to trade minute, at least 1 hour time frame or 4 hour time frames, etc. Not 5 minute, 1 minute charts. But my personality, and that's me. But this is definitely a breakdown. Again, 1 minute chart. You're still gonna easily can have same thing, but in 1 hour time frame. So it pays to be patient. Like here, when you saw this a run for the stop losses, this wick, huge, wick candle. That's why I started buying after I saw it close here. It gave me plenty of opportunity. All right, on a 1 hour time frame. I didn't need to rush anything. I didn't need to run. It's enough, and it gives you a peace of mind and confirmation, so you don't do dumb shit. Because on 1 minute chart, you're gonna take 50 trades, 100 trades a day, and I don't want to take 100 trades a day. So. Guys, I can't read all the comments, but yeah. So the buyers are back in action. You can see that they're kicking the fuck out of it, and we're pushing new lows. What did I just say with a breakdown and continuation? Okay, so again, breakout, retest, continuation. It happens over and over and over and over and over again, right? So that was a 1 minute example of 1 minute trade. I don't do it, but if for those who like action, that's the way to do it. In any case, guys, the big kahuna will be happening at 2 p.m. I'll be back here around 2 p.m. Because right now I'm pretty much done with my silver trade. So, oh, nice. We're approaching resistance and daily limit, ATR limit. So, plus we're already up 2.4% for the day. Another thing is, looky here again, fake out, right? Let me see if the gold breaks out, and then I can hop on and see if there is a little bit of a retest and continuation. If anything, I would be trading gold today. Plus, it's a reversed head and shoulders. I can remove this, right? Shoulder, head, shoulder, neckline. So this was a neckline for this head and shoulders, and now it's reversed and serving as a resistance. So once we have a breakout, retest, I would be interested in buying here. And for NQ, I'm looking for lower. For NASDAQ, I'm looking for lower here before I want to catch a turnaround to the upside, because we're still correcting. We still have the gap to close, okay? So this would be the area of interest. Right now, since none of these things are still happening, I can go relax and I can just set in alerts, but I'll be doing other stuff, running companies. But I'll be back at 2, and 2 p.m. we will continue this today. It's almost 10 p.m., 10 a.m. right now. So at whatever that is in your local time, I'll be here, and we go from there. About maybe 2:30 actually, not 2, maybe 2:30. Okie dokie. All right, I'll see you all around 2 to 2:30 today in a couple hours. All right, cheerio.